Right, today is Friday, February 26, 2021. This is the end of day review for the live trading room. The end of day review covers performance of our adaptive entry system. Let me get on the correct chart here. The adaptive entry system is a system, a set of market metrics that allow us to have a reasonable idea of which direction the market is going to move at any point in time. Now, in order for us to train properly and help our community of traders really learn how to effectively teach this or trade this, we work with the NASDAQ 100 futures. We trade a 5-minute chart that gives us a lot of activity during the day. It gives us a lot of opportunity to explain the signals, when to enter a signal, when to go long, when to go short. It gives us plenty of opportunity to explain and help our community understand when to exit out of a trade and how to make some of those more difficult, challenging decisions when there's conflicts in the directional bias of the market. So the adaptive entry system is a very simple to read, simple to use system. It uses color coordination for rising bias trades being blue and declining bias trades being red. We also have these vertical lines in here. Green is long, red is short. We make it really, really simple. But it does take some time to get used to it, get accustomed to it, and really learn how to trade it effectively. So today was a really good day, and it capped a very strong week for us. So what I want to do is to go through our performance for the day. And we're going to plug that into our personal trading plan. If you've been with us before or listened in before, you know that we use the personal trading plan to help keep track of what our uh, overall performance is to date, meaning what our average run rate is on a daily basis, and then project forward what that run rate would lead us to in terms of a overall profit or loss for a year. When we're trading the NASDAQ 100 futures, we are trading with a $20 a point value. So each 1 point of movement in the NASDAQ 100 equates to $20 of value, whether that's profit or loss, and that is per contract. So we're trading, we're actually in our personal trading plan, we're trading 3 contracts now. So we start with the detail, and as Michael and Aaron were calling out signals today, they were recording in our tracking tool the time of the trade, whether it was long or short. We're trading on a 5-minute chart. They also record the strategy. So we've got a code for the strategy. So the T's are trend bias trades, the C's are consensus trades. There's T plus, which is a trend continuation trade. There are fractals, you'll see F's in here, and then there are fractals that also align with the trend. We list profit or loss on a point basis, so 5 points, and at $20 a point, that's $100 of profit. Here we had a 20-point loss at $20 a point. That's a $400 loss. And we keep track of every trade from, actually we go back, when we get in the morning, we go back to 3 o'clock in the morning, and we record everything from 3 a.m. forward. Most of our attention is focused on starting at 8:45 in the morning, because that's when our live trading room opens for our community, and then we trade until the end of the day. Sometimes all the way right up until 4 p.m., which is market close. Generally, we're closing sometime between 3 and 4. Today, it's Friday afternoon. We've had a really strong week, and we decided to call our stop trading 2:30 today, and so we're done for the week. All right, so that's the trade detail right there. And then the trade detail is summarized in a very easy to see format where we can see the overall performance for the day, primarily in the 3 categories that we track. So we've got the 9:30 to noon category, we've got the 7 to 4 category where we're only taking the trend bias and continuation signals, and then we've got 8:45 to 4, or end of the market day, whenever we end today. And we start at 8:45 because that's when the live trading room opens. So these three categories, starting at 8:45, starting at 7, starting at 9:30, they each have a little different configuration to them. So obviously 9:30 starts a little later, starts right at market open and finishes at noon. That's trading all the adaptive entry system signals. 7 to 4 is a much longer commitment of time for a trader and only trading the trend and trend bias, trend and trend continuation signals without trading consensus or momentum signals. And then 8:45 is trading all of the adaptive entry system signals and fractals on top of that. So different time frames and different configurations of which signals we're taking. And the reason we've done that is because we want to demonstrate to our community how effective the personal trading plan is, no matter what time frame you're trading, no matter what configuration of signals you're trading. And so we have three different configurations. So let me jump to the personal trading plan. And this is the personal trading plan. And we've got three, let me go over here. All of the blue is our history, meaning those are the days that we've already recorded. Those are in our history. So we're down to Friday of the week of February 22nd, and we're on the 9:30 to noon where we're taking the adaptive entry system signals. So I'm going to scroll over to where we enter our performance for the day. And I actually have to jump back here just a second. There we go. So performance for the day, 9:30 to noon, we lost 15 points. We lost 15 points. It's $20 a point. So 15 times 20 is $300 times 3 contracts. So we lost $900 today in that category. And then we did 11 trades at 3 contracts per trade. So it's 33 contracts. So let's jump to our 7 to 4 category. And in the 7 to 4 category, we made 35 points today. We're net positive 35 points. 35 times $20 a point is $700. We're trading 3 contracts, so times 3 contracts is $2,100 a profit. 2,100, and we did 15 trades at 3 contracts a trade, so it's 45 contracts. And then our last category that we're tracking, this is the actual live trading room hours and taking every signal that we call out. And in that category, we finished the day up 75 points. So 75 times $20 a point, $1,500. We are scaled up to 3 contracts. So that was $4,500 a profit today, 4,500, and 34 trades times 3 contracts per trade was 102 contracts. Now, before we go forward here, I just want to point out that it's been a really strong week. We had several people who were just kind of checking out the live trading room this week, trying to understand whether or not it's right for their trading. The cumulative performance for this week was just a couple ticks under $6,000 of profit for the week per contract. That pays for about a year and a half of live trading room performance just this week. And if you take a look at what the overall average has been in the 8:30 to 4 category, we're averaging 44.5 points a day of profit. So 44.5 points a day times $20 a point is 44.5 times $20 a point is $890 a day of profit potential per contract. So it's been very strong today. This will generally be the strongest category, but the other categories have some real strength to them too, and you're going to see that here now as we go through the updates to the personal trading plan. So I'm going to start back with a 9:30 to noon. I am putting in 3 in the contract override field. That ensures that if we start doing any kind of research on what our forecast would look like by changing some of our values, that it will not go back and change our historical values. It will only go forward and that change will be reflected in our future forecast. All right, so now that we've put our data in, let me just show you what these numbers mean. We are 34 weeks now into a 52-week plan. This is a 52-week financial forecast for our trading. That's 18 weeks that we have left. During the 34 weeks, we've lost on 59 days. Okay, that's an important number to us. We know we're realistic enough and transparent enough to know we're going to have losing trades, we're going to have losing days, but we want to keep an eye on it, and we want to know what the ratio of losing days to the number of weeks in our history is. And in this case, we have 59 losing days. So now these two values are telling us what our average profitable day is, and our formula for calculating that also takes into account the frequency of winning days to our history. So it's not just a straight average of the winning days, it's saying winning days plus our the relationship of winning days to our history. Uh, so 21.49 points is our positive day, and our losing day averages 43.19. So 43.19 takes into account the fact that we've had 59 losing days in 34 weeks. So that is our run rate. Those are our run rate values, and those are numbers that we can use then to project forward. So once you get this far into your personal trading plan, there are going to be minor adjustments that you need to make to your forecast on a daily basis. So here our average run rate is positive 21.49. When we updated this 2 days ago, it was 21.75. So there's a minor adjustment, and you're going to see it's not going to affect the overall projection dramatically, but I'm going to update that to 21.49, because with all of our history now behind us through today, won't be any more trades again until Monday. We want to make sure that our going forward forecast is based on what our actual run rate is. So our negative value day average increased just slightly. So we're going to change that to a minus 43.19. And so now with these values as our history and using those same values to forecast the next 18 weeks, combining our history with our 18-week forecast and keeping our maximum contracts to no more than 3, our 12-month income is estimated to be $125,259. Now that value will continue to change slightly over the next 18 weeks. As I said, this far into the plan, you're not going to have huge dramatic changes, but it does change. But here's the bottom line. We started on July 6, 2020, tracking a 52-week plan. We've got 18 weeks to go. We have a $125,000 forecast. This account started with $5,000 in the account. So growing from 5,000 to 125,000 is a pretty reasonable growth in my opinion. So let's go to our second category. Let's lock in our contract overrides there at 3 contracts. We're trading 3 contracts. Again, 34 weeks into this plan, 54 losing days in this plan. This is trading from 7 to 4 and only taking the trend bias and trend continuation signals. Our average winning day is 28.17. You can see that the forecast we did 2 days ago was slightly less than that, so we've improved it slightly. So I'm going to change the winning day value to 28.17. And the losing day average also improved slightly in this particular category, down to 38.95. Again, not big dramatic changes, not huge changes, but slightly enough so that it will have an impact on our overall 12-month forecast. So minus 38.95. All right, so maintaining no more than 3 contracts. We have a 12-month forecast, the 34 weeks that are already in our history that won't change, plus an additional 18 weeks that are out in front of us. And our 12-month forecast is $221,693. That's again in an account that started with just a $5,000 balance. All right, so the last category represents our live trading room time frame. So 8:45 a.m. to 4 p.m. or whenever we discontinue trading. Now this category just started. We actually decided to do a calendar year. The other two categories we were tracking since July 6th. So, it's mid-year to mid-year. We decided in January to also track performance of what we actually call out in the live trading room during the live trading room hours. So there's no waiting until 9:30 or no starting early at 7 in this category. And we wanted to see how that would project out. So we are only 8 weeks into this plan. We have 12 days of losses in the 8 weeks. We've already scaled up to 3 contracts here. We started with 1 contract in January. The personal trading plan automatically scales us up to scales contracts based on using no more than 10% of the balance of the account for the margin required for the contracts we're trading. And then it's also limited by what we insert as a maximum number of contracts. I can set that as a trading business owner at whatever I want. You have the personal trading plan. If you do, you can set that at whatever you want. 3 contracts is, in my opinion, conservative, but a very reasonable number to allow us to grow. Now, what's interesting about this story, and I'm really glad that it happened this way, you can see here that we scaled up to 3 contracts, and then we actually hit our largest losing day that we've had so far. Now, we're going to have some big winning days, and we're going to have a few bigger losing days. We hit our biggest losing day. We were at 3 contracts when that happened. So the personal trading plan automatically scaled us back to 1 contract because it's calculating the balance of the account against the margin requirement for the contracts that we are trading. And we only had enough balance to trade 1 contract then. So we went right back to 1 contract. If you were just starting out, you might have been a little discouraged there. I'm telling you, you got to keep your eye on the horizon, and you've got to just continue to take the signals and trade through and count on the averages. I'll talk more about the averages here in just a minute. So we scaled back to 1 contract, scaled then up to 2 contracts, and now we're back to 3 contracts. So I don't see us going back to 1 contract, given where we are in terms of balance of the account, but anything can happen. So we'll just take what comes for us. So we're at 3 contracts. We're averaging 42.49 points a day. That has improved since we updated this 2 days ago. Now, with us being only 8 weeks into the plan, into the 52-week plan, you can expect probably some bigger variations from one day to the next, but you just stay the course, you put in whatever your performance is, and once you get 3-4 months out into your plan, um, those daily variations aren't going to be that big. So 42.49 is our positive day average forecast, and minus 49.37, minus 49.37 is our negative day forecast. We're going to keep our forecast, our maximum number of contracts forecasted at 3. Our 12-month forecast is right now $352,699. That's having started with $5,000. Now, I want to be very transparent and realistic about this. I think, as I mentioned, with us only 8 weeks under our belt, that's not enough for us to have a real strong conviction that that's a good number yet. But it does give us an idea of where we're headed. We know where our run rate is, and I would ask you a question, not that you have to answer it here, but I would ask you a question that if our run rate values decreased, don't know if they'll increase or decrease, but just say they decreased. This is the thought process that you might go through when you're evaluating your own account. If they happen to decrease and the projected income decreased down to 300,000, or the projected income decreased down to 250,000, and you know that you started with $5,000, would you be still delighted with your performance? I think I know the answer to that. I know the answer for me is I would be thrilled with the performance. So this is early in a new tracking period, only 8 weeks in. Let's give it another 2 months and see where we are. And when we hit 4 months, 4 to 5 months, I think you're going to start to see the daily variations in the values of run rate and prior forecast will not be quite as dramatic. And we'll then start to zero in more on what a realistic forecast is. But right now, if I'm a small business owner and I've been in business for 2 months, I'm pretty happy with what the forecast is. I'm also going to be realistic to know there's things that can happen. I've got 2 months behind me. I've got 10 months to go. There are things that are going to happen. I'm going to stumble a little bit on some days, and I'm just going to trade like it's the easiest thing in the world, and everything falls into place on other days. It's a combination of those days that keep your eye focused on the horizon and say, I only care about the averages and the big picture. If Monday we have a losing day, well, I'm just going to plug it into my plan and I'm going to see where that puts me in terms of my 12-month forecast. Keep your eye on the 12-month forecast, and I think you're going to be pretty happy with what you see over the course of 2021. Okay, let's go back to the averages. Um, Aaron has added a new feature for our um, tracking here, where on a daily basis now we can see, well, what was the maximum drawdown during the day, and also what was the maximum profit. And the reason that maximum profit is important to me is because, um, and let me back up a minute. These values work off of whatever we have inserted in our research category. So we have a research category over here that right now is set to trading all plus fractals, 845 to 4. So when you look at the daily summary, that's this category right here. So these loss and profit numbers, maximum drawdown and maximum profit numbers, relate to whatever's in that research category. So if you take a look at this, for example, yesterday we hit a maximum of 70 points of profit, but we closed the day with only 30 points of profit. Here's a day where we closed with 36 points, which I will never complain about 36 points, but we were up 71 points. The reason I'm sharing that is because we have a large number of people in our community that trade right along with us, starting at the open of the market day. And we have people who might hit 20, 30, 40 points in the first hour, hour and a half of the market, and they're done for the day. And then we might end up finishing only 30 points, or we might end up finishing negative. Here's a great example of, we finished negative by the end of the day, 52 and a quarter points negative, but we were up 21 points at one point. So my point in sharing this with you is that we are committed to tracking the detail of every trade until we stop trading, which is mostly towards the end of the day, generally after 3 o'clock. Today was an exception, being Friday afternoon, but we're tracking all the detail. If it was just you trading your account and your goal is 20 points, you made your 20 points here, and if you kept trading, you might have lost 52 by the end of the day. If it was just you trading your account, you made 15 points here. By the end of the day, you're only up half of a point, but that's okay because you didn't quite get to your goal. So here's another good example. Here's a day where you hit your goal. If your goal is 20 points, you hit your goal earlier in the day. If you kept trading all day, you ended up finishing down 27 points. This is why the personal trading plan has such tremendous value to it. You have an idea of what your target is, what your goal is for the day, and trade for that. And the reason you're trading for that is because you know what the 12-month forecast looks like. You know that the 12-month forecast gives you X amount of possible income. And if that income matches something that you would be delighted with, then why trade more? Every single time you take a trade, you have risk. The later in the day that you trade, that risk is magnified, in my opinion, not because of anything different with the signals, but because you don't have you're losing time later in the day to be able to claw back and recover if you have losses. So there are a variety of opportunities to take your signal. Here's a very, very prominent example. The maximum profit for the day was 22 and a quarter points. So you hit that earlier in the day, but if you traded all day, you ended up down 156 and a half points. The combination of the tracking, the combination of the adaptive entry system signals, using those along with a personal trading plan is a very powerful way for any one of you to be successful in trading. Just follow the rules, follow the signals, use the discipline of the personal trading plan, and set aside all of your personal bias, all of your preconceived notions about what should be traded and when it should be traded and how long you should hold and risk to reward ratios. Just set aside everything and just trade this. And if you don't have confidence to do that right now, then do it in sim mode for a month and prove to yourself, validate for yourself how simple this trading approach can really be. So we're pretty delighted here to have three different approaches that we're tracking. One has a $352,000 forecast. We've only been at that one for 8 weeks. This one has a $221,000 forecast. We're 34 weeks in. And this one has a $125,000 forecast. We're 34 weeks in. Each of those three accounts started with $5,000. So they're each separate accounts. Each started with $5,000. And I think any one of those is a great demonstration of how effective the adaptive entry system signals are and how effective it is to be part of our live trading room where you can listen in as Michael and Aaron help identify the signals and help you understand how to effectively trade the signals, when to get in, when to get out. It's very simple, but it requires some discipline on your part. It requires a commitment to education on your part, and it requires a commitment to paying attention and not deviating from what the signals are telling you to do. So it was a great week this week. Thanks everyone who was visiting for being here. Hope you saw something amazing because it was a pretty productive and very good, profitable week. I appreciate all of you being here and all of our regular community members. Thank you for being here every day. Appreciate everything you do. We do this for you. We continue to develop systems, continue to research systems, continue to research market metric signals in an effort to provide the most comprehensive, consistent, performing, simple to trade systems that we can. That's our objective, and we do it for you.